QuickBooks Pro Desktop 2021 Budgeted Income Statement Data Input. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the open windows list. We're now going to do the data input of the information we looked at in prior presentations into the QuickBooks system. So if you just want to know how to actually enter the data into QuickBooks for a budget of the income statement, this is where to go. If you want to know how we got that information, then take a look at the prior presentations where we exported reports from QuickBooks to Excel, generated a projection or a budget, which we are now going to take and input into QuickBooks so that QuickBooks will then be able to generate reports for budgeting and nice reports that will compare actual data to budgeted data as time passes. So this is what we did last time. We've got our budgeted income statement from January on through December. We're going to say this is for 2020. Now we got to enter all this data into the QuickBooks system. So we're going to go back on over to QuickBooks. We're going to say, all right. And by the way, as we do this, just remember that January and February has already passed in 2021. We're kind of imagining as we do the data input that it had not passed, as if it's December of the prior period. We're putting the budget in place as of that point in time, projecting what will happen January, February, and then moving forward so that then we can run reports and we'll be able to see January and February comparing what actually happened to the budget, which we're entering now. And then, of course, beyond that point, we have not yet done any actual data input. We'll solely have the budgeted information. So we're going to then go back on over to QuickBooks. To do this, we're going to go into the company, and then we're going to go down to planning and budgeting, and we want to set up budgets. So I want to set up a budget. And then we're going to say this is going to be for 2021. We're going to be taking a look at the profit and loss or income statement. And next, we're not going to have any additional, so we're not going to go into the customer information, no additional criteria. And then next, we can create the budget from scratch, or we can create the budget from the previous year's actual data. So we don't have any budget, we don't have any information in the previous year's actual data. But if you want to take that, that can be like kind of your starting point, as we did or discussed when we made the Excel worksheet. Your starting point is kind of like your prior year data that you'll basically take possibly the annual data, break it down to a monthly perspective, and then go from there to think about what the changes will be. So this option automatically enters the monthly totals from the last year for each account in this budget. So that, again, could be a place where you basically start if you have the prior year data in there and then make your adjustments from that point. I still think it's easier to do that within Excel, but in any case, we're going to say finish, and then we're going to get this chart of accounts, basically, that will allow us to do our data input. It should be in a similar format as basically what we have constructed in our Excel worksheet, because we're only taking a look at the income accounts over here. What I would like to do now is basically freeze the panes. I'm going to use a freeze panes type of thing so that we could see these things side by side. So I'm going to go to the View tab up top. And you don't need this feature. This is just, but you got to put your cursor. But if you want to, I'll just show you how to do this, and that might be useful to you. So we're going to put our cursor in B2. We're going to go to the View tab. I'm going to go to the Freeze Panes, and I want to freeze panes, which is this top one. And that means that you'll see these kind of darkened lines. And then if I go to the right, then this section stays the same. So I can see my titles, and I can see the data right next to it. So I can do my data input hopefully a little bit more easily that way. So now I'm gonna enter this data in. We should have a similar lineup. Notice you can make the cells a little bit longer by putting your cursor in between the cells in a similar fashion as you do with an Excel, and extending those cells. So there we have it. And this is just the income statement data, so it should be in a similar order, considering the fact that we're going basically in alphabetical order on the income statement, income and then expenses, and then alphabetical order. Notice they put the annual amount in the beginning, so that's because January is going to be over here, and then the annual amount is in the beginning. So what I'll do is I'll go back on over, and if you had two computers or two monitors, I should say, then it's a little bit easier to do the data input. But we're gonna do some switching back and forth here. So let's start this out. We got the 750. We got the 750. I'll put here in January 750, and then we increased it. We said that's going to increase by the 1.05 or 5% each time period. That's what we expect or hope to happen from a budget perspective. Notice that those accounts that change are a little bit more difficult, and they're probably more unusual. In other words, these accounts down here, all the expenses that are going to stay fixed, those will be easy to input. The ones that are going to have the adjustments from month to month or some periodic adjustment, of course, will be a little bit more difficult. So we want to increase this by 5% each time period. Let's see if we can do that in QuickBooks over here. So now I'm going to say, all right, let's go back onto this first tab. And what I would like to do is, instead of just copying it across, it's not going to be the same. I want to adjust the row amounts. So I'm going to say adjust the row amount. Now here we can choose either option. It says either the first month is where we're going to start, or the currently selected month. We're on the first month, which is the currently selected month. I like to use currently selected month because that's, I think, more universal, an item that you can have. So then we're going to have an increase rather than a decrease. So I'm going to say increase each remaining monthly amount in this row by this dollar amount or percent. So notice the way you indicate whether you're going to be increasing by just a dollar amount or a percentage amount is with the percentage sign. So if it doesn't have a percentage sign over here, it's going to be a dollar amount increase. If you have a percentage sign, percentage increase. So we're going to be increasing it by a percent. Now it's not going to be 1.05, but just 5%, because it's 5%, and then it's going to be increasing from the prior time period. So that's 105%. Times the prior period, which is what our formula was in Excel. So we also want to enable compounding, meaning it's going to be increasing 5% and then 5% on that in February and so on and so forth, meaning it should continually be increasing, compounding on itself by 5% each period, each month. So I'm going to say OK and check that out. And then at the end of the day, we're at 11,937.81. Does that tie out to what we have in our total over here? We got in the total 11,938, and that's rounding. I believe that is correct. So let's go back. And now we have the guitar lessons. Let's do the same for the guitar lessons. 4125. So I'm going to go over here and say, all right, guitar lessons. It's going to be 4125. And then I go back on that cell so I can copy it across, but we increase that one by 10%. So same concept. So I'm going to increase. I'm not just going to copy it across. I'm going to adjust the row. I'm going to say for the current thing we're on, we're going to be increasing it by 10% or just 10%. So there we have it. And we are going to be doing the compounding. If I say OK, the ending total for the year is 88,210. So 88,210, is that what I have here? So I'm going to say 88,210. Right. Looks good. Okay, so next item. And as you go, you might want to I'll greenify these maybe to say that I've completed them, and say, okay, I'm on the one that's not right under, that's not green. Might help to kind of follow along. So then we're going to say the sales. Sales is 20,047, 200,047, or 200,47, 200,047. All right, and then we're going to copy that across. We're going to make this a little bit longer, a little bit wider. But that one increased by a dollar amount, 1,000, which will compound each time. So we're going to increase that one not by percent, but $1. So I'm going to go back on this, adjust the row again, current month, deleting the percentage sign, just $1,000 each month, which also will compound each time. So we're going to say, okay, that's at the 306,564. So the 306,564 at the end of the day, or at the end of the year, 306,564. There we have it. Looks good. Looks good. So we're going to then greenify that one. Then we have the service 3340, 3340. So let's put that here. 3340. No change to this one. So we just go on that one and say copy it across. That's when it's easy. So we got the 40,080. So 40,080. Does that look good? We're going to say, yeah, it does. Looks great. All right. And so then we're going to greenify it. Let's greenify that one. Okay, and then the next one we said was 20. It's always going to be a percentage, or 80% of the sales is our cost of goods sold. You will typically have a relationship if you sell inventory like that. So I'm going to say that one started at 1638. So we're going to say cost of goods sold. I don't have any shipping. I'm going to skip down here to cost of goods sold. 1638. Is that what? No, 16038. Is that right? Is that what it was? Yeah. And so, but I can't just say, hey, look, it's 80% of sales all the time in QuickBooks. It doesn't know how to do that. QuickBooks can't think that way. So that means that we're going to say it's going to increase by 80% of the $1,000 increase, right? The $1,000 increase, it's going to increase by 80% of that, or $800 each time. And therefore, it should increase, if we increase it by $800 each time, it should have the same effect. Otherwise, we'd have to enter these one by one for the entire year, which sometimes you have to do. So you got to do what you got to do. But I think we can shortcut it this time by going to the adjust the row. And this is going to be increasing by 800, which is 80% of the 1,000 increase that we had on the sales side of things. It will also be compounding. Let's see if that comes out to the correct number by saying, okay, 245, 256. This was the most difficult one. So we'll check it out. 245, 256. Perfect. So that was the most challenging one, and we accomplished the thing that we were trying to do, which is good. So then we have the bank service charge, 18. So I'm just gonna assume these will be the same. I'm gonna go to the bank service charge. Notice it's adding some other items because these are line items that are on the chart of accounts that we haven't been using yet. If we do not expect to use them, then you can make these cells inactive and they'll no longer show here. So in other words, if you go to the lists chart of accounts and you're saying, hey, I'm not using a lot of these income or expense accounts. It's been a few months. I don't need them, I don't think. Then you can go into those accounts and you can make them inactive by editing the account. I'm not going to do it to this one, but just note you can make it inactive, or you can actually delete the account. I suggest making it inactive. And that way, if you need to pull it back, then you can take a look at it for that. So I'm going to close this back out. Close this back out. We won't do that now, but I'm just to note that's why those other accounts are here. And we were on the bank service charge. That's where I was before I started rambling about other stuff. And this is going to be 18. So we'll say 18 on the bank service charge. And then I'm going to copy that across. This is where it's easy. This is where the easy stuff happens. So then I'm going to just greenify the bank service charges. And then we've got the depreciation 69. The depreciation for the equipment, was it? Is that right? Yeah, that's going to be 69. And then we're just going to copy that off, copy that across, back to Excel, right click and greenify. And then we're at, for the furniture, 1167, 1167. So 1167. Copy that one across, and then we'll go back to Excel and we will greenify, right click and greenify. And then we have the insurance expense, not this is insurance expense. So I'm going to go insurance expense, skipping one. That one's at the 917. So insurance is at 917. Copy it across, back to Excel, selecting the row, right clicking on it, greenify. Then we got the internet expense, not interest, but internet 90 internet. And so I'm going to put 90, copy it across, back to Excel, select the row, right click on it, greenify it. Miscellaneous 75 in the miscellaneous. So say miscellaneous 75, copy it across, back to Excel, selecting the row, right click on it, and greenify. Doesn't want to, it's jumping. All right, and then 250 in the office supplies, 250, 250. Copy it across, back to Excel, select the row, right click on it, greenify. And then payroll expense 5795 payroll. So 5795, copy it across, back to Excel, select the row, right click on it, greenify. We're almost there. This is great repetition. Good times. Telephone expense 363. Telephone, skipping down here to the 363. Copy it across, back to Excel, selecting the row, right clicking on it, greenify. Utilities 634. So I'm going to go back over here. Utilities 634. We're going to copy it across, back to Excel. We're going to greenify that one, greenifying. And then there's nothing in the gain or loss, so I'm not going to do anything there. And then interest 326. Copy it across. And then I'm going to we don't need to greenify it. I'm not going to greenify it. What I'm going to do then is I can save this now. So I'm going to save it. And then what I'd like to do, I could check all these annual numbers to what we have in the system, but it might be easier to do that with an actual report. And so if I have any errors here, you're probably saying, hey, you messed up somewhere, and I may have messed up somewhere, and that's possible. But I'm gonna check it, and I'd rather check it by actually generating the report, and then use the report to kind of check it to Excel. And then if we need to go back into it, I can go back into it from that point. So I want to make sure and save it this time, and then I'm going to close this, and then next time we'll go back in and I'll generate the actual report that we have now constructed, and then we'll use that to basically do our comparison to our Excel worksheet, and then we'll just do some analysis of the report, and then we will do our exporting of the report as well, and then move on to the balance sheet next time.